So the question that is on everyone's mind that's trading the market right now is how low can we go? When is this madness actually going to stop? And it's kind of weird that by predicting all these market crashes and tops in the last couple of months, we're actually trying to identify a bottom here as most of the people are running for the exit. So in this video, we're going to review a couple of conditions that could be taking place that are going to be super crucial for you to pay attention to as you're trading, looking at the charts tomorrow. So this video is designed for you to really make the best decision you can possibly make when it comes to short-term trading tomorrow on February 28th, 2020. So with that said, this is the most important thing that you should know. We've started earlier video we posted in the morning about a possibility of a couple of move formations, okay? We almost got one of them today. As we were hitting some key levels, guys, right about here that we've been talking about, a 10% correction S&P, when we're telling you to short the market right here at the level of 33.92. We're pointing this level of 3,025, and we said, hey, if we get to this level between 3,000 and 3,041, that would be a good idea to actually buy some calls. Well, here's what happens intraday. Shortly after we post the video, the market hits 3,006, so that was a perfect area for buying calls for about half of the day until the conditions that we actually see in the volume, what would be a match for a perfect move 13 formation. There was the lack of volume. So typically when you see this V-shaped reversals in the market, identifying the bottom, volume is a very important characteristic, and that is one thing that was absent throughout the day. Now notably, some of the stocks like BKNG, they were trading really strongly. So after making these huge drops consecutively, we're actually seeing some buyers do come in, trying to scoop some of these shares at some of these levels. However, what is important to know, if we don't get a move like this that's going to look like this tomorrow, guys, then we could be heading substantially lower. So yes, what we've pointed out in the prior video is watch out for these type of formation. And most of these formations, they have specific time frames throughout the day. So we got a failed formation like this today on the 27th. The market is likely to stage another variation of one of these formations tomorrow. So look for a reversal about 9:45. So the probability one, you're going to open up your screen tomorrow. Everything's going to be in the red. And as the market opens, things are even going to look crazier. Everything's going to look like it's completely falling out and crashing. So you can get a sharp move lower followed by a sharp buying spree. And the second probability is the market is going to continue dropping, and that reversal is going to come in the second half of the day. If neither of these two things happen, then this is how you should position yourself going into the following week. So understand, look at your screen tomorrow when you're watching the 1 day, 1 minute chart. If you don't see this or this tomorrow, okay, this is not going to be a 10% correction. This is going to be a serious correction. Up to about 20%. We're going to look at two cases showing you the calculations at 14% and 20%. Now, the importance of that is the first level. This has been a very meaningful level right here. That means that we're not officially getting just a small undershoot. So right now on this chart on S&P, you have situations, okay, on multiple occasions where we sort of pierce this level of the orange line, which would be the 200-day moving average. Sometimes the market will do this. It will break below that, and then the next day it'll bounce out substantially higher from that level. Okay, based on these conditions around here, just looking at this daily chart, we can easily visit a level of 2860 tomorrow before a huge reversal. Now, with that said, okay, if we take a closer look, the behavior of this sell-off has been rather unique because very rarely do you have not just the magnitude of the moves that we have seen, but the speed of them developing day after day. So despite, however, of how bearish this thing looks, guys, look at the next historic analog I'm going to show you under the stand. What could the next candle actually be? Because if that actually takes place tomorrow, you stand a chance to make a ton of money, okay? So pay very close attention. The reason why we're going to take a look at this, okay, the speed of the rate of change of this drop, it highly resembles this condition in the Dow on October 27th, 1997. When you look, the actual crash in Hong Kong was taking place on October 23rd, 1997. So in response to the crash in Hong Kong, This is how the markets were responding on October 27th, 1997. This is exactly what happened to the Dow. It drops 515 points. Now, adjusted for today's kind of conditions, this drop of 515 points at the time in 1997 would represent a one-day drop of 2,030 points. Now, we've seen some drops in the last few days where we've been dropping 800, 1,000. Biggest drop today of over 1,100 points on the Dow. Now, this would have, what you've seen today, and what's represented by this candle would have doubled the size of the drop that we have seen today in the market. So basically, we've seen a 7% drop on the 27th of October, 1997 on the Dow. Now, important to understand is what actually takes place next. Look at this candle right here. That's the candle that I pointed out to in the morning video saying, look, we could be close. It could be today or tomorrow. We could be getting a candle like this. And what you can see, if we take a closer look, the formation of the candle that was formed today highly resembles this one right here. So despite of how bearish things are, we could be getting this candle right here. Now, important to also understand, after you get that candle, the market makes another pop, slightly reverses, but doesn't visit those lows, and it doesn't visit those lows for months after that. Okay, so tomorrow could be this key pivotal reversal point. And let's take a closer look to understand this just a little bit further. So if we don't get this type of candle tomorrow, guys, then this short-term bottom that we've been trying to nail today and tomorrow is likely not to materialize for another 7 to 10 days, because at that point we can easily visit the levels of about a 20% correction in the market. So with that said, if we apply this to the Dow, 14% would put us at 25,302. And the reason I'm using this 14% because I'm going off this historic analog. If we take a look, 5-day drop in the Dow, following that crash in Hong Kong on October 23rd, if we look at these numbers on October 27th, combine this entire drop, you get a 14% from this candle all the way down to here. So 14% drop would put us on the Dow at 25,302, which is not like much lower from where we actually ended up today. So we can get, again, a move lower tomorrow, followed by that reversal, and if that takes place, it's actually going to match this chart perfectly. As you can see, if we would use this as a candle of where we closed today, okay, we can make another move lower, but look how quickly this reversal comes. So yeah, can we get another 500-point drop tomorrow in reverse? Yes, absolutely. And look where we finish. I mean, we finished pretty much erasing all the losses for the prior day. So the 1,200 point loss that you've seen, we can open up 500 points lower tomorrow and reverse. If you total up that reversal, that could equate to a reversal of 14, 15, 1,600 points on the Dow. Now, that is an insane reversal. That's why I'm saying if this historic analog, okay, is going to take place tomorrow and it's going to repeat itself, okay, you stand a chance to participate in one of the hugest one-day freaking reversals, okay, that the world has ever seen. That's why you stand a chance to make a ton of money with options if that indeed is going to repeat. So, again, let's take a look at the probability. If that white candle, that reversal candle, does not happen, then we can see a 20% reversal, and we can drop all the way to 23,581. 23,581 would coincide roughly with, again, this weekly chart on Dow Jones would coincide with the 200-day moving average right here. So we can go straight down here over the course of the next few days if we don't get a reversal by tomorrow, guys. It's crucial that we see a reversal. It doesn't really matter if the reversal comes in the morning. Based on the historical chart, the timing here really points to a reversal in the morning hour. Okay, so between 9:30 and 10:30 in the morning. If we don't get that, it automatically diminishes the probability of reversal. But if we actually look at the move 4 formation, right, those reversals happen in the second half of the day between 1:30 and 2:30. So in that case, the reversal could still come in. It could still be highly powerful, as in the case of, let's say, February 9th of 2018 type reversal, which was also on a Friday, where, you know, we've opened up substantially lower, erased all the losses for the day, actually finished slightly positive for the day. But if we don't get this reversal first thing in the morning, right out of the gate between 9:30 and 10:30, then the probability of a reversal is diminished substantially in the second half of the day. So I'm letting you know these things so you can position yourself perfectly for tomorrow. Now, with that said, where would that actually put S&P 500? Using the same historic analog, 14%, using the level of 33.92 on S&P, we could go down to 28.31. Now, earlier when we were looking at the daily chart, I mentioned a level of 28.60. So we can actually see this quite a meaningful move before a reversal in the S&P 500. So sharp drop to 28.60, 28.31 level, followed by a quick reversal. If that does not take place, we can see S&P clearly all the way down to 25.94, which would represent a 20% drop. And again, coincide with this orange line just under the orange, in this case. Now, at this point, we can easily expect Trump tweet. We have not had some of his tweets in some time. We had a couple of public appearances from Trump. He acted rather calmly, but at this point, I think he could come up with something crazy to just really maintain the markets at this level for the very least. So he really can't afford a recession before the election. We shouldn't forget the power of Trump tweets. So everything can happen right here. Guys, I've got a really lengthy video I'm going to be posting over the weekend about the overall market situation and stuff like that. So if you're new here, click the button, subscribe so you wouldn't miss out on all the details on that. Guys, there's so much information out there that I'd like to share, but I simply can't do this on like every minute basis as the market is changing. So do your best with these free videos. If you have not taken our courses that could give you deeper insight on how to trade these markets, click the link below, take advantage of it. Schedule a free call if you have any questions about the markets. Guys, with that said, I know some of you have set some incredible records this week, but tomorrow could be really a record-breaking day for trading options. So I wish everybody great success tomorrow. Let's roll. I'll catch you on the next trade soon.